Hello and welcome to our Sonar Spotlight series. Today we are catching up with Luca Schnettler. Have I said that right, Luca?
That's very well said, yes.
Are you sure? Okay, thanks. Who is the CEO and founder, I believe, of Qumata. Nice to meet you, Luca. How are you doing?
Very well. Thank you very much for having me. It's a pleasure to be back, having had an interview, I think in 2018 it was, right? Very early stage in our journey, and great to be back, and thank you for having me.
You're welcome. Yeah, I think it was just after your seed round, if I'm right in thinking. So I feel like the clock sort of ticked by. In fact, what has happened over the last 2 years, but what has happened certainly from you guys is you've grown into becoming a pretty formidable insurtech, so a pretty formidable business, and you have closed recently your Series A. But they are things that I'd love to talk to you about. More than that, though, is there's I think when we interviewed you, you were Healthy Health, and now you're Qumata. Can you give us a little bit more about you and about the business, and for those who don't know Qumata so well?
Absolutely. Let me give you a brief introduction. I mean, you're absolutely right. We used to be Healthy Health. We got consistent feedback that it was one of the world's worst names conceived. We did sometimes get the positive feedback that it was so bad that it stuck in people's head. So that kind of made me kind of think, that's true. Let's not change it. But at some point, I think our Series A investors, hopefully you don't mind, MMC, Ollie, really great investor. They kind of said jokingly, if you want our money, you have to change your name, right? And then we said, fine, we'll do it. Obviously that was a joke, but yes. So we changed our name to Qumata, which stands for Quantifying Human Data, which is, I think, a little bit more, in the area of what we do. And to explain a little bit what we do is we are really a tool that helps life and health insurers move their underwriting to the 21st century. So whereas traditionally, if you want to buy a decent amount of sum assured with a life or for a life or a health policy, you'd have to go for long questionnaires, medical exams, and so forth, and that leads to long application times that can really lead to a large dropout from a customer perspective. And so what we've done is we've got a set of APIs that can integrate into an insurer's backend, and it basically allows any customer that applies to one of our customers or one of the insurers that we work with, that applies to their products through the agency channel, the online direct channel, cross-selling opportunities. There's a lot of cases that you can apply us to, but basically it allows them to skip those traditional underwriting questionnaires and medical exams, and they can instead just share their digital data, which at the very minimum is steps, but it can be heart rate data, it can be GPS data, it can be various amounts of data that the customer may have. They share that data, and then we basically use that to create a risk profile, including risks of diagnosis for hundreds of medical conditions, as well as extra mortalities, morbidities. And to make a long story short, the insurer can then use that risk profile created for that data to price that risk, and ultimately it cuts application times from days to seconds and increases the conversion rates. And yeah, I mean, we've been growing. We've raised that 10 million Series A. We're now doing around 1 million policies this year. Very active in Asia and Europe and the US. Those are our markets, and yeah, working with some big brands, and now are looking to kind of really break out and scale our initial traction up to really change how underwriting is done in the life and health space. That's the mission.
Good stuff. And if I'm right in thinking, you are currently in Dubai, right?
Right now, yes, I am.
And how did you? Why is Asia such a big market for you? How did you break into Asia? Because the normal, you're German but living in the UK, or is that home for you, right? So the normal step, right, is the UK market, the European market, and then maybe the US, if not Asia. So how come you guys have grown so quickly over there?
I think there are multiple reasons. I mean, I would say probably strategically speaking, we have a couple of priorities. I think the UK market is one where we're quite advanced as well and want to really scale up as well. Asia is an interesting one. I mean, I feel insurers in Asia are a bit more willing to move on data, and that may be and I'm putting out here guesses, but from my observations, I think there are a couple of reasons. The first thing is, from just a perspective of, data and data availability and ability to share data. It's quite centralized. Especially when you look at markets like China, where you have a platform like WeChat, which has WeChat Steps, right? And it's
Sure.
used by 1 point something billion people. You just integrate with that, you have data availability straight away. And on top of that, it is much more accepted. The digitization in the markets are much more accepted. We feel like there's this classic story in China, right, where you look at finance, right? You used to have like everything in cash, and then the West moved to plastic and credit cards, right? And China kind of completely skipped that and just went straight to mobile payments and so forth. And I think that to some extent replicates itself as well with digital data, which is great for us because there's a lot of availability. And then on top of that, it's a great market for us in general because obviously just from a macro level, right, you have a rising middle class. What does a middle class do? They buy insurance, right? And we charge by customers applying to insurance. So for us, having that rising middle class buying insurance, this is a huge market we can tap in and one that we want to be on for a ride for.
Yeah, super cool. And then tell me about your business a little bit more. So and I'm simplifying things a little bit too much here, I'm sure. So there's one side that you're pulling in a whole bunch of different data sources, and then the other part is a risk engine. And I'm sure there's a whole load more complexity to that, right? In terms of where from the kind of the journey in terms of the engineers and the tech team that you've had to build, where's the focus been? Is it one side versus the other? Are there other sides that I've missed off in my very simplified version of what you guys get up to? Where's the difficulty? Where are the challenges? Where's the magic that you guys bring to the party? Because I appreciate it's a relatively unique offering in terms of the market, but where's the attention spent?
Yeah, I mean, I'd say we're very data science led business. So I've been extremely lucky to have hired some really amazing team and obviously not just in our data team, but specifically also in our data team with our head of data Kobo and our wider team that works with him. Now, I mean, our core IP, is our algorithm, and our algorithm is based on huge data sets that we've collected and gotten access to throughout the world. Now, this algorithm, has this unique ability to take data such as steps and take heart rate and others, and from just this minimal information, predict your morbidity and mortality risks. And so far that just hasn't been replicated. And a lot of the companies are trying, a lot of the reinsurers are building similar models. But I believe our vast access to data, and I would also say our ability to have picked up a lot of the low-hanging fruits in terms of clients, really allowed us to kind of build that leading position in the life and health data-driven underwriting. Having said all of that, of course, now it's time to really scale that up because most underwriting is still done through paper and through medical exams. But I think having that advantage on data, having an amazing data science team that really can drive up that uniqueness of our proposition has been core to our success. And then, of course, our IT and our design team and so forth have really then led to have converted that data science advantage into really an implementable product that is easily implemented with insurers, and speaks also to the consumer that ultimately has to share their data.
And how far down on the I don't know, have you been able to do any kind of quant analysis? I'm sure you must have had to, in terms of the bringing of your technology, your algorithm into a client relationship versus what was there previously for these guys. Can you see a marked improvement in terms of accuracy, in terms of performance with your stuff? Is that there yet, or is that kind of next stage?
No, it's definitely there. Yeah. So let me give you a bit of an explanation of, I guess, where we're at and what our achievements have been and what our challenges coming up now are. So, I mean, to simplify, I think we're now at a stage where we've proven out our product. We've done many POCs, and I'll explain in a little bit how that, because I think the accuracy point that you touch on is a very important one, and I'll explain that in a minute. So we've proven that, and we're now live in the market, with several large multinational insurer brands that you will have heard of in the market, in the US, in Europe, including the UK and in Asia Pac. We're underwriting around 1 million policies this year. we predict around 3 million roughly next year. So we're definitely already at some scale. But I think now we've proven the product works. We've proven that there's benefits. We're increasing conversion rates. In one of our direct marketing examples, we've increased conversion rates by 300% just by cutting out that underwriting friction. And now the challenge really is, breaking that initial success into a wide scale, rollout and picking up market share and really showing the wider market that this is now really where the future is heading. Because one thing about insurance, right, it is a very risk adverse, slow moving industry, and so that's really the crux of it now, to really build on that initial success and make it a widespread model of underwriting. And I guess just to touch a little bit upon how specifically our value add has been there and the accuracy point. I think right now when we go out to pitch to insurers, personally I believe the biggest benefit of our solution will be our better risk selection. Now, traditional underwriting has a great risk selection, but I think it focuses a lot on current and past risk, and it may not have included yet the risks of how your activity potentially influences your future risks. However, that is, especially in a protection space, a long-term argument, right? Because you have to see the claims coming in, right, and so forth. So instead of that, what we're currently really pitching to get into, to get integrated within our insurers, and what has helped us to get integrated with our clients, is to say, okay, look, the low-hanging fruit benefit of our solutions is cutting out friction in your process, so that you can basically make sales much quicker. So your agents can make sales much quicker, so you can have better marketing opportunities at no cost to accuracy, which is the key point, right? And then in the future, potentially you have a great awakening and see, man, your risks, your risk selection, your loss ratio has improved, and that's great. And then we'll have a secondary benefit. But in the short term, we really focus on increasing conversion rates through cutting friction and not having less accuracy. So then you may ask, okay, but how do we prove that we don't have less accuracy? And usually what we've done, and we've done this now with many insurers and reinsurers across the globe, which is we basically usually run a kind of a pilot POC before we go into production with a client. And that usually is, you have a couple of, 1,000 people that go through both for the same person, both for traditional underwriting and for Qumata's underwriting. And you then basically look at the cases that traditional underwriting has declined. What has Qumata rated them for? And usually we have 95% plus match rates on those. And that then gives the insurer enough confidence to say, okay, it's not going to get us a worse loss ratio than traditional underwriting. It's going to be, at the worst case, the same. Potentially it's going to be even better, but at the worst case, it's the same. So that means if we implement now, not going to have any loss ratio impact. However, our conversion rates are going to go up, and potentially in a couple of years' time, we'll wake up and see it hasn't even just been as good as traditional underwriting, maybe even a little bit better. And that's kind of where we're coming at the moment, and where we're trying to scale from.
All right, super cool. I love that. A quick question within that. How long does a POC like that take for you guys?
That's a good question. I think it's decreasing. Initially, probably it was 8 to 12 months, because when we were doing our first pilot, right? Because we didn't know also what was going to happen.
Sure.
Did the product work? All of this kind of stuff. I mean, I know our first POC was very tense. But now, we've done probably 8 or 9 of them now, and we know what to do now. Usually now it's a 2 to 3 month process. We've really cut down our sales cycles, and usually what happens now is, we get introduced to a client. We 1 or 2 months getting them comfortable with everything, 2 to 3 months POC, then 2 to 3 months contract negotiations and so forth, and then you're usually rolled out. There are some ways, we have some great reinsurance backing now as well. I mean, we've just announced our partnership with Score. We've got a couple of other cool ones coming on board now, and that helps, because if a reinsurer approves your model, especially in a market like the UK where 90% is reinsured or so, right? Then for some products, right? So then if the reinsurer backs it, no need for a POC to some extent, because they're taking all the financial risk.
Yeah, understood. And then let's come back to the MMC guys coming on board. So an amazing investor, great round. So congratulations on that. And with that money, what are you guys up to? What's the plan? Global domination?
Yeah. So
more of the same.
I think. I mean, that's the goal, right? I mean, ultimately, look, I really found this business because I want to build something big. I'm having a lot of fun building what I'm building, but we're still a small company in the grand scheme of things. And yes, we've raised that. I remember as it's funny because when I started the business, right, I just came from Germany. I didn't have any network. I never worked in insurance. I never worked anywhere really. And I remember I was like, we got our first angel investment for like £10,000, and I was like, wow, this is like so much money. Like, oh my god. And I think if someone had told me like 3 years later you'd have raised 10 million, I was that's unbelievable amount of money, right? And it is a lot of money, but I think now the bigger you grow, the more you also start to think, oh damn, but like my friend Stephen from Bought by Many just raised 300 million, right? And I want to be at I want to build a company up to this level, and I have no doubt once you're there, then you think, oh, but damn, AXA is whatever their market cap is 30-40 billion, right? So you want to get it. So it's always that process, and for me, I really want to build that big business. So coming back to what we're going to use the money for, the goal is to get to that sort of a level of success. But we obviously have to be realistic that everything goes in steps.
Let me just, which level of success are you talking about? Are you talking AXA's level of success? Are you talking about Stephen with Bought by Many?
Well, I think
where are you aiming here?
I mean, my prediction is that Stephen will build the next AXA of pet insurance and then probably go on. So look, I think dreaming big is a requirement, right? Dreaming big, but being realistic at the same time, which is, I think, the fine line you're always treading as an entrepreneur, right? But yes, I mean, if you ask me what's the goal, I mean, it's the IPO and build a multi-billion-dollar business. Now, of course, there's always things that happen in the future, and I think I like to be realistic about things and to say that you never know opportunities that may come across the line. But if you're talking about the mission and the real goal that we want to build to, it's really to get to that stage and to have sit down at the end and say, we've really made it. We've really built something from the ground up that creates value for customers. That's ultimately what it's all about, right?
Love it. And so a question within that, and feel free to evade the answer to this one. In terms of, I can see how the business will grow from customer base and geographies and just in terms of kind of size and sort of the population of people using your product, etc., like that. But what about the product itself? What's the roadmap for you guys as a product business? So where's that going to go? So we spoke 2-3 years ago. From there to here is I'm sure a big evolution in the business, not only from who you're working with and the markets that you're operating within, but also from a product perspective. I'd be really interested to know what the future of the product looks like as well.
Yeah, absolutely. And actually, I'd like to tie that question back in with the last one, which is around what are we actually going to use the money for? Because I think it's a really interesting one. Now, I have a strong belief that one of the things that can, and again, I don't have much, I don't have any experience building a business, right? But I try to be around as many successful entrepreneurs as I can to learn from them. And one of the key things that I have heard a lot is one of the key risks, I guess, is spreading yourselves too thinly and trying to do too much with too little resources because you think you're too big at that, you can do anything, right? So in terms of product, right? Again, coming back, where do we want to be? Yes, we want to be a $30 billion listed a company, but we do appreciate that we're not there yet, right? And what we could do as a $30 billion listed company in terms of product suites is very different to what we can do now, being having raised 15 million, right? So in terms of product development, I think right now, I would split it in two topics. I would say, like, right now, what's like the immediate roadmap, and that what's the vision, what's the company that we want to be in 5 years' time. I think right now it's really about expanding our scope in the niche that we've built ourselves. So right now we're obviously we're in that niche of life and health underwriting, right? And we started off just doing life mortality, right, products. So one of the product developments that we've just done is we've expanded into also being able to underwrite CI, medical products, health, a couple more kind of auxiliary products that we didn't do before, and kind of thinking about morbidity risk more than just mortality risk. Now, in the next few months, we're also going to add disability to that and a few other things. So that's kind of the immediate kind of, I guess, product development roadmap. That is adding new insurance products and also adding new variables into what we are able to assess. So, for example, using financial data to predict risk is something that we're looking at. GPS data is something, because we have a couple of telco partnerships that can facilitate that. But in the future, I really think we can build something that is really a kind of a go-to platform for risk analysis through data that is held digitally. And that can expand much further than just the life and health space, right? That could go further than just insurance in a way, right?
Sure.
But I think there's companies now like Verisk and others that are doing that just with traditional data, right? With questionnaires and so forth. And we really want to be the company that has that sort of scale like Verisk does with their solution, but just base it on digital data. And I think you can really build quite a cool ecosystem that can then, grow itself and be in a really competitive proposition, be in a very competitive position, because through all of that data, it's very hard to lose that competitive edge. I guess that's kind of where the vision that we're going in. But right now, we need to be realistic that we've gotten this money, but we need to execute on what's in front of us now, and not get so distracted about where we want to be in 5 years. Of course, that needs to be informed in what we do now, but we need to really execute on the projects that we have on hand now and the demand that we're facing right now.
I love it. I can hear the two sides of the entrepreneur, just both of them speaking. So go big, go big, go big, focus, focus, focus. Good for you. That sounds great. There's a whole load more stuff that I'd love to dive in. I'd love to understand your back journey a little bit more, the entrepreneur in you. But honestly, I think what we've covered today has been enlightening, and I think as an interview, I'm hoping we can catch up again, maybe in a month or maybe a couple of months' time, and keep chatting. But for now, Luca, I just want to say a huge thank you. Congrats on the success of Qumata to date. Congrats on the journey that you came from not having run a business to where you guys are at today. And we're going to watch with absolute joy to see where you take this business, because I think it's going to be a great success.
Well, thank you very much. No, it's been really lovely chatting to you. And yeah, let's keep this going. Let's catch up in a few months' time and see where we've come from then. But yeah, thank you very much to you and your whole team for inviting me, and looking forward to it.
Okay, thanks, Luca.